Right, what up, everybody? Guys, it's whole sucking music. This song's called Stick It Up, y'all. Stick it up, y'all.
Yeah. I built my faith in a candlestick, dreams in green. Yeah, I'm sick of the red drip margin called priest. Taking my confession, leverage like a gun. That's my life lesson. You said diamond hands, but your palms got weak. So just sold to the Fed in a power speech. Now I'm bag holding pain in the hoodie of shame. They call it free markets, but it feels like a game. Every dip I'm down to buy. Every rip I swear I'll fly. But I'm still stuck in this algo lie. I did it all for the 10 days. What? The 10 days. What? So you can take that chart in. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Yeah. I did it all for the 10 days. What? The 10 days. What? So you can keep your safe on yield and stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Yeah. I'm a fool for the tickers, can't stay sober. Every pop feels like the tops cross over. Charts look holy. I'm speaking in lines. RSI 70. Yeah, I'm out of my mind. Woo! Gurus talk, I'm the cult of the quote. Traded my faith for a rocket emoji. No, they said patience. I said pain. Yay! They said hedge. I said chain. Paper hands, man, I can't comply. Liquidity ghost, I'm baptized in losses deep as CPI. I did it all for the 10 days. What? The 10 days. What? So you can take that chart in. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Yeah. I did it all for the 10 days. What? All the 10 days. What? So you can keep your safe bond yield and stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Man, I knew it was over when the chart at my stockbroker text me, you out. I said, nah, I'm not, cause in the end, we're just chasing that rush. Fiends for a gain in a market we trust. I did it all for the 10 days. What? The 10 days. What? So you can take that chart in. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Yeah. I did it all for the 10 days. What? The 10 days. What? So you can keep your safe bond yield and stick it up, yo. Yeah. Stick it up, yo. Yeah. Stick it up, yo. Yeah. Yeah.
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show, where apparently all you need is 12 straight hours of sleep to feel better. Folks, I'm not saying I'm 100%, but I am saying I am feeling exponentially better. I basically just passed out at 6 p.m. last night and woke up at 6 p.m. this morning, and I am feeling like a new man. So that's the secret, I guess, is just chug water and sleep and sleep and sleep, and magically you're going to feel better. So I'm stoked. Market, once again, gapping up to another new all-time high. That means we have 3 consecutive days of literally record high gap ups, gap up, gap up, gap up, and none of these gaps to the downside are filled, which honestly is making me a little bit hesitant to chase this entire situation. For those of you who haven't seen the S&P 500 and the NASDAQ, yes, another new record high. If the market were to open this exact second, it would be a record high. But even though all of the price action, really the direction, the momentum, the options flow, the option structure, all of that from like just a pure data standpoint, like if we were just like measuring the empirical information we have, it would be bullish. From a technical side, though, it feels really, really inappropriate to chase it at this moment. Of course, if you already have a bullish position, ride it. Why would you get out when the getting is good, you know? But to create a new bullish position at this moment when there's going to be, as of 9:30 this morning, 3 different downside gap fills, it's one of those tough things where, yeah, it's absurdly bullish, but I don't know if from a risk-reward perspective, it's necessarily appropriate to chase it at this moment, which means that I'm personally looking for opportunity to be found in individual equities, not necessarily the overall market, until I see at least a little bit of a breather, a little bit of a reprieve in the bull party that we see in the overall market. So for those of you who watched the update video yesterday, or if you're in the Goonie Trading Discord, you know that I had SPY and QQQ calls I locked those in about $15K each, so I locked in about $30,000. That was about a 1 week swing, and now I am 100% flat. As of this moment, as of, I guess, 9:05 on October 28th, I currently have no live swing positions. I just got to wait. Maybe a good opportunity will present itself, but for me right now, it's just we got to wait and see how this thing kind of plays out. So I'm going to be breaking down what in the world is going on today, what you should be paying attention to. The TLDR is at 10 a.m. You're going to have a consumer confidence report, and at any point today, you may be getting updates related to either Mexico and the trade deal there, Canada and the trade deal there, Japan and the trade deal there, or China and the trade deal there. So we're still kind of all on the edge of our seats waiting to see either what is or isn't happening with trade deals. Of course, in the U.S. government, we still have the shutdown, so there could be a random update there. But really, everyone is waiting for tomorrow. Tomorrow is the FOMC results day at 2 p.m. tomorrow, East Coast time. We're going to get the announcement from the FOMC, the Federal Open Market Committee, that we're getting a 25 bips rate cut. The prediction markets, the Fed Watch tool, and anyone who has even a modicum of knowledge of how they make these decisions knows we're going to get a 25 bips rate cut tomorrow. What's going to either sway the market to the upside or to the downside, and potentially with like a large amount, it's all really, really going to be hyper dependent on what they talk about with quantitative easing and quantitative tightening and that type of thing. So we're going to get a little bit into that, but don't forget, we're also still in earnings season. So not only is tomorrow a big FOMC day, but I believe we're hearing from maybe Apple, Meta, and Google, and then maybe on Thursday's Apple and Amazon. But the next 2 days, Wednesday and Thursday, we have a lot of large players in the S&P 500 reporting their earnings. So that's another thing you have to pay attention to. And that really brings us back to today specifically of not only the gap up, but Captain Condor is back in play. Captain Condor is back in action, so I want to lay those levels out. We have a clear upside target in terms of resistance. We have a clear downside target in terms of support, but Captain Condor is back, I guess, with a little bit of vengeance. So we're going to see what those levels are. And obviously they 100%, at least in my humble opinion, need to be marked out on your charts today. So that's pretty much everything on the docket. I'm going to rip through all of that. And then there's probably going to be a little bit of time for questions. And now that I can actually talk today, I'm more than happy to actually answer your questions, unlike yesterday where it felt like every single word was like a ordeal from a respiratory perspective. So anyway, now that I can actually talk, I'm happy to chit chat with all of you. So with all that being said, let's get rocking over here. First things first, shout out to Apex, 80% off with the code Goonie. They're running a massive discount in terms of that upgrade fee. This is your last day. You have 15 hours. So if you're trying to take advantage of the discount and of the very, very cheap upgrade fee from eval to performance, you have 15 hours left, as in this is your last trading session. I would assume market open, good opportunity to 50-50. I would assume 10 a.m., the consumer confidence report, an opportunity to 50-50. And probably anytime really generically in the morning, I'm expecting a bit more vol. So for those of you who are familiar with the 50-50 technique, this is probably a good opportunity to do it, especially when you were considering the discount right now. And then also at a certain point, like just with these ranges, you might be able to trade it if you're just, hey, I'm bullish or bearish. But I just want to call this out that you have 15 hours left. Use that code Goonie, 80% off, pinned to the top of chat and in the description of the video. But that is not it. Spot Gamma is running a very interesting event today, and luckily for you, it happens right at the end of this show. So this show is going to conclude at 11 a.m., and then on Spot Gamma, you're going to be able to see all the new products that they are about to release. And what's awesome is everyone who joins live, you're actually going to get free access to it for a limited time, and you can see right here on the screen all the things that they're about to drop. But 5 new products / tools, they are releasing it today. They are explaining it all today. And if you attend this, and it is free to attend, you get free access for a limited time. And then fortunately for us, Brent, one of the co-founders of Spot Gamma, is going to be joining our show tomorrow to more directly answer some of your questions and talk about how it can be utilized with the FOMC meeting, the upcoming earnings, and a little bit more of a specific look through the lens of retail traders. So once again, you get free access. I cannot stress this enough. You get FREE, free access. It is at 11 a.m. today. It's pinned to the top of chat. It's in the description of the video. My mod will also drop it in chat. So check that out. I You guys know day in and day out, I refuse to trade if I don't have Spot Gamma. It is bar none, the best options analytics tool in the game. And the fact that they are adding on more tools and services, that's just going to make it that much better. So feel free to check that out. Like I said, pinned to the top of chat in the description of the video. Shout out to Spot Gamma. Shout out to Apex. Check those out. And with that being said, let's see what's actually going on in the old stock market. OpenAI completes restructure, solidifying Microsoft as a major shareholder. Well, I would assume that news is sending Microsoft sky high right now, is it not? Oh, yep, just up 3.4%. Just a gigantic pop. Wow. Yeah, all right. So a little bit of breaking news right there. OpenAI completes restructure, solidifying Microsoft as a major shareholder. So we could circle back to that. But anyway, with respect to the overall market, stock futures tick higher after a round of strong earnings. So right now in pre-market trading, we're at a record high on both the SPY, the Qs. PayPal had their earnings up 9%, and then so did UPS up 12%. As you can see from the OpenAI news, Microsoft is now up 3.4%. Part of the reason why the SPY and the Qs are up so much, remember, this is the second biggest company based on market cap in the public markets. So right now, everyone's feeling pretty freaking good. Everyone's feeling pretty good. The good vibes are back on Wall Street. Earnings and deals and trade talks have helped send stocks to records. Question for all of you. Am I just such a contrarian that when I see this, when everyone's expecting new all-time highs every single day to the point that Wall Street Journal is writing articles, hey, good vibes are back, just YOLO all your money into it. Doesn't that feel like the perfect opportunity to get a little bit rugged? Maybe I'm being a negative Nancy, but when everyone is like, yo, this is so bullish, I just get a little hesitant. When I see everyone on one particular bus, whether the bullish bus or the bearish bus, that's where I start to say, are we going in the right direction? Is this the right thing? I like it when there's kind of healthy debate for one side or the other. And I'm like, okay, I kind of get that. And I'm going to go with this one side because of reason, whatever, X, Y, Z. But when we're at the point of everyone's telling me to be bullish, when there's articles being written, I don't know, man. Like I get a little hesitant when I find out that everyone is starting to agree, because that seems like the perfect recipe for a little bit of a rug situation. So we'll see. Obviously, this has fuel. I will not disagree. Price structure, price momentum, options flow, option structure, and narrative sentiment. All 5 things are bullish. The only bearish thing I see going on right now is the fact that the overall market, like SPX, NDX, we're about to open up, where are we going to open up? Around 6893. So we're opening, there's going to be now 3 downside gap fills. We are opening above yesterday's high. We're opening right about where my cursor is. So downside gap fill to yesterday's high. Let me mark this out. Let me make it red so you know it's a downside gap fill. So yesterday's high, Friday's high, and Thursday's high. Downside gap fill, downside gap fill, downside gap fill. That is the only thing I see going on that maybe the bears could be pointing to, because we know the odds of filling these are very high. Obviously, the question is when. And it might take a bit, because all of a sudden, if the market reacts well to FOMC, if all these earnings go well this week, especially these major like Mag 7 big tech plays, and then on top of that, if all these talks go well, yeah, these gaps might remain and we might get this blow off top situation. I'm saying that is possible, but also what's possible is getting the downside gap fills. I think it's very healthy every single day to understand what the bull camp is looking for and what the bear camp is looking for. Understand both cases, so as the data comes in, i.e. price action, you can understand, okay, this is what you might potentially be looking for. But right now, Wall Street is just ripping it. Let's not look at the fact that the dollar is being devalued like no other. And when you account these gains for being inflation adjusted, we're actually not positive. But whatever. On paper, we're all feeling better about life. Stock bulls see S&P 500 rising above 7,000 as momentum builds. So my question to all of you, and I don't mean this rhetorically, like I actually want to know your answers. We are today basically looking at 6,900, 7,000. Who in chat thinks we're going to be seeing 7,000 before the end of the year? Do you guys think 7,000 will be hit at minimum before, I guess, December 31st of 2025? Or do you think that this run we're seeing right now, it's going to do one of those things where we pop up, come down, and maybe chop or maybe sell off for the remainder of the year? who here is in the camp of 7,000 before year end, and who here is in the camp of no 7,000. So give me a thumbs up for 7,000 at minimum, and give me a thumbs down if you don't think we will be hitting 7,000 by the conclusion of this year. Thumbs up, thumbs down. Thumbs up, thumbs down. Oh, wow, you guys are very optimistic. 7,100, yes, 7,100. End of this week is possible. Yeah, it is possible. This week, 7,000, 7,100%. Big blow off top over 7,000, then a recession before Thanksgiving. You guys are crazy optimistic on both chats right now. I'm not seeing one person who's actually thinking that this isn't going to happen. 7,300 by the end of the year. Some people are calling out for it to hit this week. Wow. All right. Well, we have a lot of bull camp members in here today. Trump hails golden era in Japan relations. I'm bringing this up because I know recently the big news as it comes to trade deals is U.S. and China. We know the Treasury Secretary Bessent had a very good meeting with effectively his counterpart in China, the vice premier, and they laid out the foundation and basically said, hey, everything's looking good, setting us up in a very favorable position heading into Trump's talk with Xi, so the president of the U.S. and president of China, meeting in South Korea. And also just to remind you guys that a couple weeks ago, maybe 2 weeks ago, President Trump accepted an offer to visit China in early 2026. So even on that particular front, it's looking good. I would say the trade front with Mexico also looking good. With with Canada, not so much. Trump is very, very pissed off at Canada right now, but I would say that's the only one that's not trending in the right direction. So all these other large trade partners, it is a good deal. And I feel like right now the China news is getting so much attention, as it rightfully should. But don't forget that there's a lot of exciting things right now going on with not only in Japan, but our relationship with Japan. President heaps praise on Japan's first female prime minister as the two leaders pledge to renew alliance abroad U.S. aircraft carrier. So she was recently elected, and Trump recently has had nothing but positive things to say about her and the relationship. And you're not only seeing it in the U.S. market, but you're also seeing it in Japan's, the equivalent of their stock market. Where's the volume here? Is there no volume? All right, they're just shaking hands right here. This was them meeting. We're doing some salutes. You get the vibe. But right now, President Trump is kind of on an Asian tour. He was in Cambodia. He was in Malaysia. He's in Japan. So don't be surprised right now, as long as this continues, if there's some like overnight updates that sway the market one way or another. So I just want to put that on everyone's radar. All right, now bringing it back home a little bit. Today at 10 a.m., we're getting consumer confidence and new home sales. So 10 a.m. today, 30 minutes into the trading session, the Orbo, we will be hearing consumer confidence and new home sales. So don't be surprised if you're a day trader, a scalp trader, if at 10 a.m. there's a little bit of extra volatility, a little bit of price jostling, if you will, which also probably makes it a good opportunity to maybe degenerately try to pass one of these Apex accounts. Like I said, today is the last day, 15 hours, 80% off with that code Goonie. Very, very affordable to upgrade today from the evals to the performance account. And maybe you don't even want to 50-50 it. Maybe you just want to get lucky and pick either the bullish or bearish direction. So I just wanted to call that out to everyone. And then it's just going to get crazier from here on out. As you can see, Wednesday, October the 29th, we have the FOMC decision, 2 p.m. tomorrow. We will be streaming that. Jerome Powell speaking at 2:30. We will be streaming that. Thursday, GDP, Friday, inflation report. So basically today, tomorrow, Thursday, Friday, every single day of this week, you have important things going down. Now, circling back to probably the most impactful thing of the week, the FOMC decision. As of now, according to the Watch tool, 98% confident that we will be getting a 25 bips rate cut. Currently, the Fed fund rate is at 4%, 97.8% confident that we will be dropping down to 3.75%. Looking at the betting market, Poly market is 98% confident as well of a 25 bips rate cut. And looking at Kohrs, 97% confident of a 25 bips rate cut. So across the board, the world is very confident of a 25 bips rate cut. So if we already know that going into it, you might be thinking, okay, what's going to sway the market? If Kohrs, Poly market, and the Fed Watch tool are all telling us with a very high certainty that we're getting a 25 bips rate cut, you could argue, isn't that already priced in? All right, yeah. But don't forget, at 2:30, there's a big I guess, press conference, if you will, where not only does Jerome Powell have all those prepared remarks, but all of the reporters get to ask him questions. And this time around, there's probably going to be a big influence of what in the world is going on with quantitative tightening. The Fed's 6.6 trillion. I'm not saying million. I'm not saying billion. I am saying trillion test. When to end its portfolio runoff. 3-year bid to shrink its asset portfolio comes up against signs of funding pressures in overnight lending markets. So we've been in periods of quantitative easing, and we saw that recently in Rona where they were buying like no other. And since then, we've actually switched from QE to QT, quantitative easing to quantitative tightening. And this is also referred to as a portfolio runoff. So literally the things on the portfolio, and that's just naturally a large seller in the market. And in the most recent public commentary from Jerome Powell, the chairman of the Fed, he's had some discussions and points about, all right, we're starting to see some weakness in the economy. And when we're seeing weakness in the economy, we already know we're going to get a Fed rate cut. But with that, do we necessarily want to be selling into the market? Because right here, there's pressures in the overnight lending markets referred to as repo. And this isn't necessarily the right environment to explain and get into the nuances of what the repo market is. But understand this, it is massive. It is massively important. It is massively influential. And when things start to break, they can break aggressively. It's one of those things where basically just big banks are lending out billions, if not trillions of dollars for small interest payments on that, literally in the overnight session. And there's a big influence of what that money is loaned out from the Fed directly. And then on top of it, when the Fed is either buying a lot or selling a lot, clearly that's going to have influence as well. So this is most likely what's going to be swaying the stock market tomorrow when we get these results, is the market's perception of what Jerome Powell says about, really it all comes back to quantitative tightening. And of course, if the market can, I guess, garner any true opinion of what the future rate cuts are going to look like. Are we basically going to keep just getting 25 bips, or are they going to give us one big one, or are we only going to get a couple and then all of a sudden they're going to pause it? So obviously another very important thing to pay attention to. But that's not it. As I've already said a gazillion times today, earnings season. So this morning, SoFi, United Health Group, PayPal, UPS, all doing pretty well. The only one not doing well from earnings is actually Caribbean. I guess people aren't going on those cruises anymore. But anyway, tomorrow you're going to hear from Verizon, Boeing, and CVS and Caterpillar to get your day started. But really the parties after Jerome Powell, when the market closes, we hear from Meta, Microsoft, Google, and Chipotle and Carvana. And then on Thursday, Amazon, Apple, Coinbase, Reddit, MicroStrategy, Rocket, Riot, Cloudflare, Roku, just to name a few. And then we have some energy plays on Friday. The one that I wanted to talk about is Amazon. We didn't get earnings, but it's also up this morning on news. Amazon to cut 14,000 jobs as CEO Jassy taps AI to reduce costs.
Job cuts piling up in corporate America, with the latest coming from Amazon announcing in a press release that it's cutting 14,000 corporate roles. Let's get more now with Matt Bloxham of Bloomberg Intelligence. Matt, we see periodic layoffs at tech companies. Are these layoffs that we're seeing in recent weeks more significant than we typically see?
Yeah, I guess they are, and I guess the question is, what's really kind of the motivation? I think in the case of Amazon, it seems like this is them still kind of recalibrating after quite substantial overhiring through the pandemic, and I guess it also talks to kind of the future economic outlook. I think if Amazon felt confident that the market was really going to grow strongly, then perhaps they wouldn't be laying off so many people. But there clearly is this element of technology evolution, and particularly AI, and companies are always looking for productivity improvements. Amazon in particular is very focused on automation. So I think as the AI technology matures, companies are looking at ways to either kind of recalibrate jobs, shift people to kind of different tasks, or in some cases reduce net headcount. And obviously we saw some news overnight too that Sequoia Capital is planning to invest in Rogo Technologies, which is looking to improve, I guess, in the short term, the life of junior bankers, but maybe ultimately, replace them. And obviously, we've seen similar moves by OpenAI recently to kind of to replace junior bankers who work upwards of 80 hours a week.
All right, couple of things to say here. Once again, we're getting another piece of company information that AI is being very disruptive. Obviously, AI starting to carry more and more of the workload, and we're hearing about job reduction. And what's kind of interesting about this is, do you guys remember way back when Meta was really getting hit? I'm talking, hang on, circa... No, is this it? No. I'm talking all the way back here at the end of 22. Meta fell from 385 all the way down to 86. Remember that some of this was extreme quantitative easing, but also in this entire period, pretty much every time we had an earnings, they were just laying off more and more people. Microsoft did the same thing. There's an interesting sentiment of these big tech players and probably other non-tech companies, but the ones fresh in my mind are tech plays, where they're like, yeah, we fired more people. And the stock market's like, hell yeah, you did. Hell yeah, you did. And we just kept going up and up and up. So we're now seeing that with Amazon pushing up on that news. And remember, earnings coming out this week. We historically saw it in Meta. We've historically seen it in Microsoft. We saw it a little bit in Google. Apple was one of the few tech people that didn't hire so many in like the COVID period, so they didn't really have to lay that many people off. But we're kind of back in that, I guess, boardroom discussion, or the C-suite at minimum, of just saying, yeah, I guess to pump our stock, all we have to do is get rid of people. So we're going to, I guess, just keep our finger on that pulse to see if that particular trend continues. All right, before the market opens, if you haven't already, sign up for the newsletter. It is 100% free. You never have to pay for it. You never have. You never will. Every single Sunday, you're going to get a breakdown of what's going on in the market, cheat sheet for earnings, cheat sheet for all the major macroeconomic events. As a reminder, today, consumer confidence coming out at 10 a.m. Consumer confidence, 10 a.m. today. And also with respect to seasonality, this specific day is bullish. Here on the screen is a look at your hypothetical equity curve. If you bought it open, sold at close on the S&P 500 futures market over the past 27 years, you would be climbing and climbing and climbing. The bulls have won this day 61% of the time, so an 11% edge with a very nice profit factor of 2.74 and a pretty decent Sharpe ratio as well. A couple years ago, there was one clear hit, but beyond that, the bulls are dominant on this particular day. Is that a guarantee? No, I'm telling you right here, the odds are 61%. So basically 3 out of 5 times the bulls do win this day. For the remainder of the week, tomorrow is neutral, Thursday is neutral, and Friday is a bit more bullish than bearish. All right, heading into today, let me get up the S&P 500. We're at a new record high, and as of this moment, we are going to be gapping up for the third time. 1, 2, 3. So that means we're going to have a downside gap fill to 6877, to 6807, and to 6749. There are 3 gaps in the chart, which makes chasing it at this level, creating a new bullish position, very, very difficult because the odds of getting these gaps filled are very high. Well, the counter argument to that is the fact that everything we have, price structure, momentum, options flow, option structure, and narrative is all bullish. That is obviously favoring the bull camp, while the bear camp is probably saying, wow, this is way too much, way too quickly. Look at all these downside gap fills. If you are trading this today, if you're a day trader, scalp trader, whatever you want to call it, hang on, let me fix this. Visibility should only be on that. Okay, cool. Here are the key levels I'm looking at on the intraday trading session. As I always do, I mark out the previous high, low, and close. That is the green, the red, and the white. And you're going to notice today it's a little bit different. I have 2 different transition zones, which are these white boxes, the shaded one and the unshaded one. So the unshaded one, the larger region, is 6895 by 6840. Why do I have that up today? Because Captain Condor is back in play. Captain Condor to the size of how many contracts? Oops, sorry, I zoomed out. What the fuck is going on? Sorry. Net OI. I want to see how many contracts it is today. It is in the realm of 24,000. This is a very large position. So a call credit spread 6895 spread by 690. 2 O's in there, and then 6840. So this is the put credit spread. So remember, when you have a put credit spread, which is an over bet, and a call credit spread, which is an under bet, that is an iron condor betting that we end the day somewhere within this region, below 6895 and above 6840. They want it to be within these bounds, and as you can see this morning, their upper bound is already being tested. Remember, this iron condor is not being created by a large hedge fund that has a lot of evidence and this and that and the other thing. It is created by a Discord group. There's a Discord group in the US that clearly has a lot of money in it, and they just follow this one guy's signal and they all pile into the same play. And I actually haven't even seen evidence that over the long term, the group is net profitable. So just because you see it, please understand it is not necessarily the end all be all of like, oh, it has to work. Because like I said, I have not seen evidence that in the net, this group is profitable, but obviously the group has a lot of money, which means that it's influential, because you could even see that it per day when they do trade, there's a large gamma influence. So I want to throw that out to everyone that Captain Condor is back in play, and that is one of two transition zones. So you have a lot of resistance right here, 690, and I wouldn't be surprised if we get smacked here and at least at minimum get the downside gap fill to 6877. But if for some reason we catch ourselves here and start to push, my upside target would be 6940. And once again, that's just coming from where I see large money at play. So if you're like, no, man, don't tell me about being bearish, this thing is going to rip and I don't want to hear anything else, your target would be up here, obviously on the break and hold above 6,900. However, if you're a bit more bearish, you might be looking for the downside gap fill. From there, we do have a big gamma node for whatever reason at 6865. So that would be your secondary target. And then from there, you could watch 6850, where we danced around quite a bit yesterday morning. So obviously, here's your bull case. Here's your bear case, and you could play it accordingly. I am not your mom, and in all reality, I do not care which way you play it, but I do think as a good trader, you're going to be incredibly mindful of whatever either direction is. You're going to want to know both, because you want to know what's on the mind of both sides. I think it's trading in itself is not prediction of, oh, I should be bullish or I should be bearish. It's a game of reaction of, okay, what are our breakouts? What are our breakdowns? What are the key levels? And most importantly, what is your risk to reward at that moment in time? So that's where we're at today. Of course, we'll come back to this. Of course, we're not going to have that much data right now, but I'll show you the throughout the day. We could check the flow. Right now we're just a little bit too early into the day. We only have 2 minutes worth of information, and actually out of the gate the mag 7 is decently bullish and the SPY is bullish / neutral, I would say. All right, that's kind of interesting. Oh, and I forgot to show you guys that I didn't break my rules. I'm attempting to be more disciplined. Yesterday, I made about $1,000 per account. I did tweet that out just in the sake of transparency. I do like to think that I'm the most transparent trading streamer, whatever you want to call it, influencer, which is such a lame term. But right there, I made about 1.1K per account on all the Apex accounts. And then the Orbo trades right here, FFN Funded Futures Network. The bigger one made 400 and then the basic one made 200. So a nice $20,000+ day yesterday. And as of this morning, I have made no trades yet today. So the FFNs are still there, and then the Apexes are looking good. The best one's up 7.7K, and then 5 of them were brand new, so I only made 1.1K there. So pretty large, unfortunately for me, a large spread there. I mean, we almost have a $6,000, $6,500 differential. So we'll see how that goes. We'll see if I can clear that up and trade a little bit better on some of these accounts. But just want to let you know, I haven't done anything too degenerate quite yet on those. And I'll be just ideally waiting for the perfect opportunity to trade today. All right. So let's see, I have Bookmap up and running. Let's get over here. A lot of people trying to sell at 26,100, which is about 15 points above where we are. Shout out to Bookmap. But right here, there's a lot of sitting pending orders. That's that deep red. And then in terms of the buy orders, I'm not, unfortunately, seeing too much. I'm seeing sell orders up here. Clear resistance, which is probably roughly going to align with the S&P 500 at 6,900, roughly, give or take a few points. But clear, we basically opened up at resistance, and there's the downside gap fill. So if you can get into this particular play with good risk reward and following trend, it's probably going to be your solid trade of the day. But let's wait. The momentum is all bullish. 5-minute, 10-minute, 30-minute, 4-hour is all very evidently bullish. I'm marking out the all-time highs. Whatever you see on the SPY and the Qs today, the intraday high, it is the new all-time high. Same with SPX and NDX. We are at new all-time high territory. All right, what's moving today? Microsoft was up 2.9%. SoFi is up 1.4%. What's the big movers? Oh, the Russell is red. Small cap's taking a little bit of a hit already this morning. How is the small cap chart looking? Maybe a little bit of a double top? Little bit of a double top. Is this a worthwhile downside gap fill to play to 247? Do I want to play this? Is that crazy? NVIDIA is moving. All right, you guys are shouting out NVIDIA. Am I insane for wanting to play that downside gap fill on IWM? It doesn't feel insane. Let's look at this. That might be an interesting play. IWM, what's the flow? There's a flow. It's starting to pick up a little bit, but the flow's down throughout the day today. I'm just looking at this like kind of this like island top thing, maybe a double top rejection and just downside gap fill, maybe an overshoot to 244. But that's about $2 right there. It is strong momentum though. It is strong momentum. I don't know. That's definitely catching my eye. It's definitely catching my eye. SPY looking at 6,900 is effing nuts. I fully agree. Yeah, here we go. We're going for the downside gap fill. Folks, it's not going to happen every time, but whenever you see it, you have to be mindful of it because it's so statistically common. So whenever you see this stuff, you just have to be prepped for it. You really, really do. And it has another about 10 points. Has about another 10 points. Interesting. Oh, should this be my play of the day? Should I be trying to take advantage of this? Can I get in with low risk? That's the question. It's a little early for me, but if I can knock out one good trade right now, I could just be chill and done for the day. And I'm talking about via my Apex. I'm watching a chart over here. I'm wondering because there's a downside gap fill on the Qs to 628.55. On the SPY, there's a downside gap fill to 685.54. Even if I can capture half this distance, I'll be looking good. Half the distance, I'll be looking good. Okay, so like yesterday, we're seeing the SPY take a hit, but the Mag 7's actually showing strength. Interesting.
Order.
All right, I'm taking a stab at
Order
it.
submitted.
I'm taking a stab at it. Okay. Where is my... Little early for me, but I do like this idea of the downside gap fill. Oh, that's pretty messy, isn't it? Well, this is the 1 minute. Let's zoom in here. I'm thinking, do I just want to right away, because it is early, I wonder if I should be more mindful of my risk. Oh, what risk do I want to use? I'm in at 54. I could either use 10 points or 20 points. Right away, I have my first target at... What is this low? 34.25. All right, so we'll do 35 on this one. 34.25. So I'm in at 35. What I was looking at was the red, the white, and the blue are just the EMAs. So right here, we pushed to about 933. We started to fall through the EMAs. We pushed up, and right here, this bar, see how we pushed up and rejection? That was the play. And unfortunately, now I thought we were seeing a lower high, but now we just broke it. So we switched structure, unfortunately. And that's what I get for playing a little too early. Oh, do I just want to cut this now? I'll give it a second to breathe. I got to think about this. Do I want to risk the all-time high? Hang on. Give me one quick second because I need to look at the flow. If this pukes off of it. Okay, wait. Hang on. I'm seeing prices going up, but the Mag 7 flow is looking a little weak here. And so is the SPY. So this right here, the options flow is favoring me. Huh. But we are holding these EMAs. I think I was a little early to this, but you never know. But looking at this flow, I am fighting momentum. 5 minute, 10 minute, 30 minute, 4 hours all bullish. 5 minute, 10 minute, 30 minute, 4 hour. I am fighting momentum, at least the overnight momentum. But I'm looking at this ever since whatever. Did I zoom? Why did I lose? Huh? Whatever time this is. I'm seeing the options flow kind of. And SPY just dumped a little bit. All right, so maybe I shouldn't be risking this. I kind of like either the concept of 75 or 72. But really what I need is for this to break. This little trend line to break. The question, if we push this 77, do I just want to get out? I'm trying to be a little bit more respectful of the risk because it's a little early for me, but also I thought this would be an easy play. Like if I could catch this one trade to the downside gap fill, that could be my trade of the day, and then I'm good. I don't have to do anything else. It could be my trade of the day. There's this low. Where's VWAP? VWAP is all the way down at 20. You would think at some point today it would want to retest 26,000. The issue is it could retest and it could be way later. Here I am fucking fighting momentum again. I do like this fill. 30, 35. This is like a C level setup. I'm not vibing with this one much anymore. 31. We're targeting that low. Fuck. If the consumer confidence report comes out solid, if I'm still in this play and the consumer confidence report comes out in 18 minutes and it's good, I'm going to get fucking blown out. Right here, I was just focused on the fact that price broke all these EMAs, went back up, got rejected. Probably should have cut this at 65. I could have taken a 10-point hit and moved on with my life. Still might get lucky. I'm just watching this trend line. The question is, how much heat do I want to take before this trend line test? Because right here, I was trying to play this right here. This was my reasoning. Lower highs and lower lows. It switched the EMA. Unfortunately, ever since I got in, I saw this lower high, which turned right into a higher low, like right away. Oh, are we really going to have three? And look at this. Like, I'm playing with the options flow, or at least, whoa, the Mag 7 just popped. So that's part of the reason why I'm getting fucked right now. Oh, how do I want to do this? Well, in a magic world, it would just come right to me. I guess I should have waited for a larger reversionary bounce. Yeah, the Qs are unfortunately, the Qs are actually bouncing bigger bounce than the SPY. It's probably because NVIDIA was looking so good. Oh, and now I'm kind of potentially missing this play on the Russell. I kind of want to play that. But is it silly with the FOMC meeting? Let's see how my account is looking over there. Damn, the NQs, they are getting a much more sizable bounce. But the fact that the SPY isn't, this tells me that it's just a time thing. Like, I just have to wait. Just have to have that patience. How much heat can I take? What's my breaking point? What is my breaking point? Oh. Well, hopefully this is the high that just remains, but if the SPY catches a bit, I'll look at that bounce on the Qs. I picked one product and I suppose just picked it wrong. Oops, didn't mean to do that. I just need this alert to know if I need to cut. Come on, just take this hit. Mag 7 just got a nice bid. Look at that. Minutes after I got in. Just got that pop. SPY's just getting hammered. How is this not breaking in my favor? How is this not breaking in my favor? Fuck. Look at that strength. I should have, someone commented it, and you're 100% right. I should have played it on ES. I just didn't think that we would see this large of a difference. The SPY's at its intraday low, while the Qs bounced a full dollar there. And now it's the awkward question of which one's right and which one's wrong. I just thought they were both going down, and I waited for that first bounce. But geez, if I played it on ES, I'd be slightly green or break even at worst. And since I played it on the Qs instead, that bounce just fucked me. But I'm hoping that I could just use this high right here, 82. Like, I'm looking for this trend line break. But I don't know. If it catches itself for the third time, I might be screwed. I might need to ditch it and then find another opportunity. Come on, just snap this trend line. This would be its third official test. Come on. We snapped it, maybe. Yeah, I was way too early to it, but hey. All right, see how it's now, it was pumping above all the EMAs, the exponential moving averages, the 10, the 20, and the 50. We're back into it, so I'm wondering if they're going to try to buy it off this, or can we get these EMAs to flip? See right here, this is why I felt comfortable actually going short, is because all the EMAs started to flip, and I was like, okay, direction is now bearish, at least in the very short term. And that's what I was looking just for a little play. No commentary on swing trades or anything. I fully understand the daily chart is absurdly bullish. I was more so saying, okay, we're just below it. I waited for the pump up, tried to chase that, and unfortunately, but now I'm watching it. See how we're still technically in the EMAs, and we're maybe saving the trend line. But I might be able to use this now. 82, which would make me feel a little bit more comfortable. 30 points is still a lot based on how much buffer I have in these accounts. 30 points is still large. Come on, let me snap it. Snap 50. Snap 50. I just want to update my risk. I want to take more risk off the table. Come on. Let's break even for a second. Break even for a second. I'm hoping it's just not a fluke. Come on. Let's let the game of stats work for me. We know there's high odds of a downside gap fill. The question is today going to be one of the days it happens? And also, can I do it with appropriate risk to reward? This first target, obviously I am short too at 54. This first target is what I am using to just move my stop to break even and then see if I could have a runner for that downside gap fill. That's the thought process. All right. Did I get this? Okay, I did get this position. Oh, I got close. Kind of. Yeah, not that close. Sorry, I'm taking a screenshot for the Discord. I just opened up a new swing position. I opened a new swing position. Swingers. Well, I don't like that. Well, my first target was at, I would have never gotten filled anyway, because I think I had it at 35 and it hit 37. All right, so see how the EMAs have now flipped though? That's what I was looking for in here. and then we went into the EMAs and it got rejected. But the time that happened, it actually legitimately put in a higher low. So this is now going to be interesting. Shoot. Right here. We're right back into the EMAs. Will it get rejected right in this zone? And that's also, come on, just get smacked. Come below 54. And then hopefully right here, lower high, lower low. Hopefully this trend continues for me at least till I can get this downside gap fill play. That's the name of the game. That is the name of the game. All right, kind of watching this structure right here. On a breakdown of this structure, not only should I be able to lock in this one, but then I'd move my stop. Well, no, if I lock that in, I'd go to break even, but you could also move it to the recent high at 61. So that's kind of dealer's choice or player's choice or whatever the fuck you want to call it. News in 10 minutes. Yeah, I'm trying to be mindful of that. I would love to have the stop at break even on that play. When that, I appreciate that, and I keep thinking about it. No VWAP indicator. I have that up on one of them. Yeah, right here. VWAP is at 18. I'm front running it by 10 points because I'm trying to be mindful of this news report. I want to lock in one and have that stop to break even. I'm trying to take all risk off the table before this all happens. Oh, should I just do it now? The recent bounce was above my average. It wouldn't be the craziest. Come on, just lock it in. Make my life easy. Make my life easy. Make it easy. We're right at that trend line. So on this snap, it should fill, I would think, because it's not that many points away. It's not even 8 points. But we're right at that trend line. Fuck. Oh, I guess I could, if I have nothing filled, I could always close out one before the data drop. And the reason I'm talking about this for folks, if you're just joining in right now, we have the consumer confidence report coming out at 10 a.m. And in the short term, that jostles the market. It might push it in my favor. It obviously also could push it against me. So based on my current risk and my positions, I'd rather not be in it before. I'd rather not be in it before. But what I'm attempting to do right now is just like, I don't know. The only way I play the market is knowing the odds of something. That's the only time I've found success. So see right here how the SPY got its downside gap fill. SPX on a relative basis is weaker. We got right into the high and the close of yesterday. That's the downside gap fill. If you played it, massive congrats to you. We called it out before the market opened. And if you look at the daily chart, there is actually two more in play, down to 6807 and 6749. What I'm attempting to play is the downside gap fill in the Qs, which is all the way down to 628.55. So that's about $1.50-ish from where we are right now. So I'm trying to lock in one at a very close target just so I can move my stop to break even, and then I can play it for free as in no risk. Either I get a lot of money and I play the downside gap fill, or that's it. Like, come on. I just want a quick look. What time is it? I'm trying to be, I have 7 minutes. That's not too bad. Do I just want to move I feel like I should de-risk it even more. Come on. Just give me a little, like just one red bar to get this flush. One red bar to get this flush. Come on. Come on. You could do it. Fuck. Bounced off of 31. Come on. You can... Fuck. Uh-oh. That might be a little higher low there. What time is it? 50. Ah, dude. All right. Come on. What do you think about CRO and True Social prediction market announcement? I saw that this morning that DJT, True Social, partnered up with Crypto.com for prediction market stuff. I think it has a stock that can legitimately help DJT, but I want to see how the partnership is structured. Like I said, it's breaking news as of this morning, so I don't know the nuanced details of the partnership, but from a headline perspective, it seems pretty good. And I think it's also interesting that they literally just like these pardons and whatnot of what's going on. I recently saw the odds of them pardoning Sam Bankman-Fried of FTX is starting to spike a bit. And then the Binance CZ, he got pardoned. Dude, come on. Shit. Dude, this is painful to watch. What time is it? I'm trying to... Dude, just give me a quick fill. Come on. Push it. Push it. Dude, it is just 11:30. It is 11:30 so much. Fuck. Uh-oh. Well, that's painful. Son of a gun. Son of a fucking gun. Look at that. It just held that line so strongly. Oh, that was the push I needed. It just didn't get there to the tune of 2 points. We got as low as 29.5 and my fill was at 27.5. And timing wise, I'm very nervous.
Order submitted.
What the fuck? What was that?
Order filled. Order filled.
Dude, why did it give me a fill at 81? All the way fucking up here. You guys saw my order was at 61. What the fuck was that? That's fucking bullshit. That is fucking bullshit. Oh my God, that's so discouraging. Literally a 20-point slippage on 2 contracts. My order was sitting at whatever it was, 65, and it filled me at 81. That's such fucking horseshit. Oh, that's so shitty, dude. What the fuck? I don't even know what you could do to battle that. Like, to get that bad of a fill, like that's absolutely fucking insane. How could it, like, clearly many orders had to get filled in this pump between whatever this was, 59 and 85. And the fact that I got it, and now it's going to come right back to me. Son of a bitch, man. That's brutal. Well, at this point, due to the time, I now have to wait. That pump right there, that fucked me. Damn, that's frustrating. That's frustrating. And it's not even one of those things where like, oh, you could have handled better. Like, why didn't you? I had in the stop. I had in the protective stop, and it wasn't even close to the fill. Not even close. Wow, that's fucking frustrating. Oh, that's brutal. I really hate this idea, and like you see it all the time in traders of like blaming others. And I guess in this case, I'm trying to think of like what could I have done better, because this argument of, oh, like your stop could have been break even, I still would have gotten the horrible fill. Where my stop was clearly did not have an impact on where I got the fill. Jesus. Fuck. $1,000. That's a brutal hit. That's frustrating. It's not brutal. It's more of like a psychological hit. It's what I made yesterday. I literally just gave back my profits of yesterday and $1,000 in NQ. Like, it's not the end of the world. Like, you can make that back. It's just more of, it makes you think about like, okay, like how do I need to be playing this in the future to be doing this shit? Like, how could I have handled the stop placement All right. Well, now I'm waiting for the consumer confidence. They might be bringing Rick on, so let's see. Where's our boy Rick? Where's the show? All right, let's see if they have Rick on today. Here's a look. All right, this should be coming out now. What is the consumer confidence? Nothing quite yet. I'm not seeing anything from Rick. Fuck, dude. That was such an unnecessary hit. I had my risk established way lower. Way fucking lower. Bummer. All right. Are they bringing on Rick?
Good Tuesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with David Faber here at Post 9 of the New York Stock Exchange.
Spy is still weak here.
Who joins today from the Future Investment Initiative Summit in Riyadh, Saudi Arabia. An amazing lineup of guests coming your way in the next couple of hours, including Ken Moelis, Ray Dalio, Snap's Evan Spiegel, and Circle CEO Jeremy Allaire. Plus some details on this news sending Microsoft shares jumping this morning, back above a $4 trillion in market cap. First, though, some consumer confidence data crossing, and for that, we'll get to Rick Santelli.
Yeah,
Morning,
here's our
Rick.
boy Rick.
Morning, Carl. Yes, a rarefied day where we're actually getting some data. Our October read on consumer confidence from the Conference Board, expecting a headline number around 93.5, comes in stronger, 94.6. 94.6 will be the best since August.
Feels like someone front ran that because we popped at 955.
There's a positive revision in the rearview mirror from 94.2 to 95.6, which means it isn't sequentially higher after you take the revision into account. As for present situation,
positive gamma above, negative gamma below. Be
much
careful
better
with
than
that.
expected. That follows 125.4 that gets upgraded to 127.5. The current read at 129, also the best since August when we were a little bit over 132. And finally, what lies ahead? Expectations, 71.5. This is a little weaker. Last month it was 73.4, but it does get upgraded to 74.4. 71.5 would actually be the weakest going back to June when it was just under 70. Also, some data out from the Richmond Fed. Their manufacturing index for October comes in a little less negative than expected at -4, and their service side comes in at -1, not quite positive. -1 would be the strongest read since August when it was +6. As Carl mentioned earlier, $44 billion, 7-year notes at 1 o'clock Eastern, completing $183 billion in supply. And guess what? Today could be the 13th session in a row where the 10-year note closes somewhere between 395 and 403. Carl, back to you.
Thanks, Rick. Rick Santelli watching the markets for us as well. The S&P coming off its first close above 6,800, and the first day of the Fed meeting kicks off today. Citi's U.S. equity strategist Scott Kroner joins us this morning to talk about this remarkable week that we're in the midst in. Scott, good morning. Good to see you.
Carl, good seeing you.
I got a would-be deal with China. Mag 7 earnings on the way, Fed decision, market pricing all of this in advance appropriately in your view?
We think market's pretty fully pricing this in. You know, when we talk about our year-end price target for 2025, Carl, it's premised on 2026 fundamentals and earnings trends. So essentially what we're looking at here is a pay forward for a lot of expected good news that does look like it's unfolding, to your point, quite constructively here. So the call for, stronger finish to the year looks pretty good for now, but this week will continue to be a big test as we get some of these mega cap growers reporting.
I saw a desk note yesterday that tried to argue that this week is the last important week of the year, given how holidays are going to ramp up and we're in a shutdown. We're not getting all the data we're used to. What do you think happens in a relative vacuum of news going into the year end?
Well, our view has been that it's going to be fundamentally based. And so the best set of data that we're going to get right now is from corporate America as they report earnings. So, government shutdown aside, what we've got is a steady stream of input here that allows us to triangulate how things within the broader economy are unfolding. And right now, what I would say is that this consumer resilience and this underlying business resilience aspect is at work and showing through pretty clear in the Q3 results thus far.
I know you do a lot of good work on sentiment. We like to remember our friend Tobias and the Lefkovich Index. What is that telling you now about how people are viewing the market, even emotionally?
Yeah, it's really interesting, Carl. I'm back from a couple of weeks traveling around Asia and Australia and talking to clients on the East Coast as well. And what I would say is that we think there's this dichotomy at work right now where positioning is quite bullish and quite extended. However, at the same time, sentiment does appear to be weakening. Essentially, the way we're framing this is that we think we're looking at a market of what we're going to call reluctant bulls. That is, you see the valuation, you see the bubble concerns. That certainly is playing into investor psyche, but this is a market you don't want to be out of. So this notion of reluctant bulls basically says, you keep giving me incremental positive information, I'm going to pay for it because I'm not really believing it's going to happen. At the same time, when you do see that aura of disappointment on a company-specific or macro perspective, that probably is going to be met with pretty stiff selling. So essentially, volatility is the name of the game here, both to the upside and to the downside.
Well, I've seen some notes this week that argue there's really no point in migrating back into quality because there's fairly high short interest and there's the likelihood that momentum is going to force some to cover. On the other hand, Sherwin-Williams is the biggest Dow contributor at the moment. Where are you on that debate?
So the way we're thinking about it, we've been on this broadening thesis for some time now, so we get it. You've got this mega cap growth tech leadership or overweight tech, but what we've been arguing as we go into Q4 is that the broadening dynamic that relates back to the Fed trajectory in terms of Fed funds should lend itself into a couple of different types of opportunities. One is in the more cyclical parts of large cap. The other is down into U.S. small mid cap, which has an inherent cyclicality to it. And then you can even begin to talk about exposure overseas as you continue to see let's say a supportive foreign central bank policy at work here. So this broadening notion means that you can come back to heretofore laggards that potentially set up for some better news short term, but the longer term play here is going to be a bit more conviction in underlying economic trajectories as we go into 2026. That's where that stock would play here.
Interesting. Finally, Scott, just on the NDX, we mentioned with Jim earlier this morning, it's 18% above the 200-day, most since last summer when you did kind of get into a bit of a correction mode. Is that interesting to you?
Yeah, I mean, I think what it all comes down to at this point, given the move that we've had, the valuation backdrop that gets so much focus, you need to keep feeding the machine. These companies need to keep giving you reasons to raise your out-year earnings projections. And as that unfolds, I think that's going to be rewarded. Now, the question that we're going to get this week as these companies report is how much of that is priced in already relative to their ability to deliver that incremental upside.
Every single time I think I'm going to get like this little push down here to 50, it just won't happen.
No question, the underlying fundamental trends look very persistent. The question is, do they give you enough given what's being priced in currently?
I think I'm on the wrong side of this team.
This is where the earnings growth is. This is where the momentum is, and it looks very visible going into 2026 at this point.
Yeah, well, you're certainly your
every
25
single time I
playbook
think
is
this
playing
is going
out
to go in
pretty
my favor.
beautifully
It
at the
just
moment,
doesn't.
Scott. Always good to get your insights. Thanks. Scott
Thanks,
Kohrs
Carl.
over at Citi. Let's get to Sarah in Riyadh, Saudi Arabia this morning at that FAI summit where, Sarah, you've already had some big interviews today.
Come on.
Thank you, Carl. It's good to see you. Yes, big
want to take
productive
some
day
risk
here
off the table
at
here.
FII, where there's an increasing number of American investors and CEOs coming here. This is the sort of tentpole event that Saudi Arabia has hosted for several years now. And there are two, I would say, big sectors represented here this year. It's finance and it's technology. And those increasingly are the companies and the sectors that are pouring into the Kingdom of Saudi Arabia. It's something that was supercharged by President Trump's visit here. Remember, I was here for that and started to talk about in May. And a lot of these companies are doubling down. So there are world leaders here as well. I had a chance to moderate a panel with 3 finance ministers from the UK, from Turkey, from Qatar. And we talked a lot about AI as a national strategy, how you protect your own industry, but also partner with other companies. Rachel Reeves, who's the Chancellor of the Exchequer from the UK, very much saying the UK is open for business. We are deregulating. I think something she was trying to underscore as a differentiation point from
every single time
Europe.
It's just getting saved here at 55.
Also coming off the heels of some big AI deals announced during President Trump's state visit to the UK
little bit of a push.
Several weeks ago. And speaking of national AI strategies, there's a big one here in the Kingdom of Saudi Arabia. They have this big new company called Herein, which is their national AI company. And Qualcomm CEO is here, and he announced this week in Riyadh this new data center chip that will be shipped next year to their client, Herein. I had a chance to talk to Cristiano Amon earlier today about the capabilities of that chip and how he responds to the competition, like NVIDIA and AMD, which also have deals with this AI company. Here's what he said.
There's two ways to look at this. One way is NVIDIA is incredibly strong on training, which is the creation of AI. But once AI is created and you started to put into production supporting enterprises, supporting consumer, then it's about inferencing. And I think in inferencing, you use standard frameworks. You basically train on NVIDIA, run on Qualcomm. There's really not a barrier to enter in software. We spend a number of years working on software, and we believe we can actually create a competitive environment. There's so much capacity that required for inference. Just a company like Herein has many suppliers. If you look at companies like the big hyperscaler, they have many suppliers. And
I'm going
here's
to
the second
close
part
this
of the
if this
answer.
breaks against me.
If you have something that is innovative,
I think I'm getting tilted because of that shit, Phil.
For you.
I'm trying to give it a chance, but
Clearly,
I
the
just
market
don't
was
think
really
my
excited about
mentality's
that
good
announcement
today.
yesterday. Qualcomm getting into the data
After
center
that,
when the
dude,
stock
what
jumped
the fuck?
double
Literally
digits,
15 points
even back
off,
a little
20
bit
points
today.
off.
But
That's
Amon
such
also
bullshit.
teased that they
Come
are in
on.
discussions with other hyperscalers, potential clients. More on that, he said, in just a few months, something investors are really interested in. And then, of course, there's the power behind all the compute, which we talk about all the time. And I had a chance to moderate a fireside chat with the CEO of Aramco, one of the largest companies in the world, certainly the largest energy company in the world. And we talked about how Aramco is also, helping the kingdom with this AI ambition in terms of building data centers and powering it all over the globe. So more to come from him throughout the week. But overall, guys, I would say AI is certainly at the heart of the discussion, and you're going to hear a lot more about it from me. Ray Dalio is coming up.
Come on.
Of course, he has thoughts on whether we're in an AI bubble. We're going to talk to some of the tech CEOs in the next hour. The CEO of Snap, Evan Spiegel, who's here. Saudi Arabia is actually a huge market for Snap in terms of users and engagement. Circles, Jeremy Allaire on how stablecoins fit into the entire picture. And then Ken Mullis, who's been doing some of these deals around data center financing and also has been doing deals in the kingdom for a long time. So looking forward to bringing you those conversations in the next few hours.
Yeah, I don't know if you're taking requests, Sarah, but I think one of the most interesting questions for Dalio certainly will be whether or not an AI-driven productivity boom can soften some of his long-standing concerns about sovereign debt and debt crises all around the world.
Unfortunately, I'm betting on the range breaking down.
Well, one thing is for sure,
50,
he is concerned about sovereign debt crises, and he is concerned about deficits. That was the focus of his most recent book, and I can tell you, I've talked to him here. He's definitely thinking about that, and we'll start off the conversation talking about some of the progress made on the U.S. deficit and what it's going to take to really get him less worried. Of course, gold also top of mind for him, as he has been recommending gold for investors. He continues to say 10 to 15% of your portfolio should be in gold. He considers it money. And
all right, that's getting boring, dude. I just range bound ever since that pop at someone front ran the announcement for sure, because we got that pop at 55, 56. Both the SPY and the Qs went up, and that blew me out of my position where I should have taken a small loss. And then I don't think I handled it well, like from a psychology standpoint, getting myself into a position that I don't mind the position. I don't think I should have sized up to 3. I think I was being greedy trying to get it back. And now, unfortunately, I'm stuck in a situation where I'm praying that this range break favors me. I don't think it's insane that it will, because my reason for this bias is look at the delta flow. The options market, well, even this, I've been in this for a while, and unfortunately since then, the SPY started picking up, finding a bit of support off the downside gap fill, but the Qs still haven't gotten their downside gap fill. So the reasoning for my trade is knowing the stats of the downside gap fill and the Mag 7 flow. But I think I just arbitrarily took the position. Yeah, we're about to go here. Shit. Without like being patient for the entry because of that first fill. I think that was like a poor mentality on my part for sure. So there's a non-0% chance. There's a 50% chance this still works for me. It could easily break down and give me a fill on one, but I just think I got a little bit tilted on that for like not the best reason. So now it's I don't know. And you could argue that a lot of trading is 50-50 to begin with, but the poor part was the sizing of it and the timing. I should have I could have been better with it. I could have been better. What's the chat's votes? Do you think this trend line is going to break down in my favor, or do you think it's going to break out and fuck me? It looks like, it feels as if it's about to break out, which it does not. Do I just need to cut this and save the accounts? If I cut it right now, the accounts are survivable. Like, I could still trade just because, fortunately, when I was in Switzerland, I traded well enough that I built up some buffer. Do I just want to cut it now, or do I want to pray that, I'm looking at this range, see these 1 minute bars on the cues? I need it to break downward, and just slightly, so I can move my other stops to break even. And I don't understand it. Price is climbing up, but the options keep getting hit. I'm trying to play this divergence. I'm trying to play the weakness in the SPY, but it is just not happening for your boy. Once you get out, it'll break down, most likely. So maybe should I just say it? Be like, hey, market, I'm out, so it can finally break down. Cut half. I can. It's almost I can't. I have 3 contracts. I could cut 1 of 3 and get to my quote unquote normal sizing. And I don't know. I think I just got maybe cut 1 or 2. Yeah, no, that's a viable option. It's just right here, every single time I see this, I'm like, oh, okay, it's starting to come to fuck. Now people are buying up the Russell. I just got IWM puts. Every single time I see it pushing on the bottom end here, I'm like, oh, I'm going to get lucky because my first target's only 8 points away. It's not far. So it's just going to be pure luck, folks. Does it break out of this range or break down? Come on. I have 50 as that key level, and the breakdown's at 53. So if it does break down, 3 points isn't that much to ask for. I'm just looking for a slight 8-point fill to help with, I guess, $160 of my fucking losses here. Come on. Just a little push, just to 50. So I can at least de-risk it a bit, and then I would just love a fucking puke here. Imagine if it just fills these 2. Come on. I just want to play the downside gap fill. Dude, I'm still so pissed off about that bullshit fill. 15 points away, 16 points away. What was it, 17? I forget where my order was, but it was in the 60s. And it gave me a fill at 81. That is such dog shit. It gave me a fill all the way up here at 81. But you could look at it on the stream. My stop was sitting, I believe, around 65, maybe 64. And it gave me a fill all the way up there. That's insane. Market makers using my entry as support. Yeah, it feels like it. Come on. So all the EMAs, we're not trending at all. Not only can you see that in the bars, but look at the EMAs. They're all just going flat. Folks, this is 50-50. You never know what the next bar is. What I'm trying to play this off of is I see the Mag 7 Delta still kind of getting hit. The SPY, it did get hit, had a nice pop, kind of slightly trending up, maybe. We're not seeing much from that. IWM is somehow fucking pumping. Dude, every single time. We need a little stroke of luck, a little stroke of genius. It just keeps coming down to 55. Is there just the biggest buyer ever? Point of control is 60, but looking at this, for as much as we've bounced off 55, I would have expected the biggest pending sitting buy orders ever. And we just, nothing. And now it bounces. Son of a bitch, guys. Lady Luck does not appear to be on my side today between this play not going an extra, 3 points and that shit fill. Lady, I think I might have used all my luck up yesterday. I might have used, are you out of IWM puts? Why would I be out of my IWM puts? It's a swing position. I'm not going to get out of this swing position 20 minutes after I made it unless the risk is hit, but my risk is not close to getting hit. Remember, most of your money, good money, is going to be made from swing trading. Big money comes from riding big trends. Big trends are inherently a function of time. Your life is going to be far, far easier if you're attempting to make money off swing trades rather than day trades. Dude, this is purgatory. How fucking many... Dude, I'm just watching this go up. It's just... Fuck. A A better entry would have been here. This trend line breakdown at 10.15 or something like that, whatever this was. I could have been in at 70. Oh, it happens. Come on. Let's just hear those alerts. Let's hear that order filled. We're seeing a little bit of some form of a pivot into IWM. Come on. 57. We're right back, I believe, at my fill. Come on. Just hit 50. Come on. The low right here, this low of the range is 53.25. We saw that at 9:58. Literally, ever since this announcement, the 10 a.m. announcement, oddly enough, you did have enough of a move, I believe. Yeah, you did have enough of a move to pass the test. The bullish test would have passed. Come on. Is it going to break? All right. The test is 53.25. Right about there. Are we going to snap the range? When I say snap,
Order
there.
filled.
Fucking Macarena. Okay, so my degenerate thing of taking on 3 contracts, and generally I trade 2 just based on my buffer. That's how many I should be trading. So I got lucky there. Let's lower the risk a bit. My reach target is 25. All right, so at least I'm now at the sizing I should be at. So the situation is not good, but it's not as bad as it was. What is this high? What is 86? All right, so of course buyers stepped right in at 50, which is why I had my first fill there. So we locked in some, but more importantly, de-risked. And by the way, I lost these 5 accounts on that pump up here, that bullshit pump, because it was unrealized drawdown. Yeah, you have 2.5K of unrealized, but once it went down 1.6 because it's based off unrealized, I lost that buffer, unfortunately. So my 5 smaller accounts are gonzo, but the 15 that I've been trading for a while, obviously I still have because they have much more buffer. Fuck, is this a fake out? Well, time to just wait. We're just waiting to see which way this does or doesn't break. IWM is somehow catching a bid. Of course it is, right after I get those puts. I wonder if I should just fucking ditch this while I can. We did just test it. SPY's catching a bid for some reason. Yeah, right here, just now, the options market, call buying, put selling, delta, 2x the rate. Look at that. Look at that, Jesus. Someone's hitting the market right now. That's a big spike in delta. Mag 7 was climbing up since 10:11, taking a bit of a breather right now after 10 minutes. All right, I want to break out on this last high. The SPY and the Qs ever since 9:57, 9 whatever have just not done shit. What is VWAP at? VWAP is at 28. It might be appropriate for, I'll leave it at 25. If it starts to, if we get there and it looks like we're bouncing off of 28, I'll just manually close one. I was looking at that VWAP target, 28. Before, when I first set it up right here, it was at 24. So I was like, oh, I'll front run it by a point, but let's see. Obviously, if this one gets filled, I'm moving the stop to break even, and I'm going to see if I could do the runner for the downside gap fill. A little bit of an overshoot there. What is this? This recent low is 29. VWAP is 28. My next fill's at 25. And as you can see, this was such a bullshit fill. I'm going to send that into Apex and see what they have to say. I'm sure they're going to give me the runaround and just be like, no, you agreed to the data. But like, that's such shit data. Such shit fucking data. Where I want to know, Go to your channel. Like, that's such shit. All right. Easy. Right there. Yeah. It's at 65. All right. Right here. I am short as of 9:53 in the morning or whatever it is. 9:55 in the morning. I am short at 26,054. My stop is at 65. Short at 54, risking 65. So technically 11 points. And then market, something happened with my fund in futures. Those were the alerts were for non-Apex. But you could see the fill was at 81. 81. That's a 16-point sliption. A 16-point slip. That's crazy. That's going to piss me off to no end. To no fucking end. 16 points. I get it if there's like a data announcement or something like that, but a rant like that, people traded that whole time. Like, how is that possible? Because you could see it. Like, how do I know? Because here's a tick chart. Here's a tick chart. So, entry. These are all, they're all trades. These are all active trades, 65. So right here, from where my cursor is roughly, here to here, 100, 200, 300, 400, like 400 at minimum trades went through. At minimum went through. Cost you 5 accounts? Yeah, it cost me 5 accounts right here. These 5, the 5 that didn't have enough buffer to withstand it. Like, that's just... it's frustrating. And like, I'm trying to think, I hate this idea of just bitching, because inherently if you're like, oh, it's someone else's fault, well, inherently that is a really poor mindset, because then how are you going to fix it? Like, if you're always blaming others, that means you're not in the control of fixing the problem. So I don't like it, but I mean, I guess I'll turn it over to you guys. What do you think I could have done better to avoid that? Like, let's not play this game of like, oh, like, woe is me, blaming others. No. Like, I'm very much of like, you have to take responsibility. You have to take ownership. Like, okay, I think that's a better way to approach it. So like, I'm not saying this rhetorically, like I'm legitimately asking you, because maybe some of you guys have been through this and you saw exactly what was going on. What do you think I should do? Like, what do you think is a better way to handle this? We're sending it in. Well, I'll send it in, but I'm saying, like, what could I have done as a trader outside of this world as SIMDA funded to avoid that type of bullshit? Because I had my stop in. Only thing you've done is trade it yourself versus limits. But see, that's dangerous to not have stops, because you don't know if Trump is about to say something or if there's a huge announcement. And at that point, remember, we were coming into the 10 a.m. announcement. So, like, for all I know, the news could have been phenomenal and it could have been 100 points away. So to just take away the risk, the stop, that seems like really bad. Limit order, it was a market order, but the limit order, if it runs past it, you're not going to get your fill anyway. So that's the same risk of like, you could have a runaway loss. It's your fault. It's your fault. It's a part of trading. Not your fault. It's a part of trading. Limit stop did not. But if you have a limit stop and the price goes past you, you don't get a fill. The limit stop will just stay there and it just keeps going and going. So you might then be taking on a larger loss. So like, yeah. What if, let's just say hypothetically, my stop was at 65. If I had a limit stop, it's basically saying I'm only willing to get out at 65. Let's say the data came out at 10 and the next print was all the way up at 100. Well, now I have a blowout loss, and it could keep going. Don't stop complaining. That is most of your content. Well, that's hurtful, but probably true. Yeah, I mean, I'm going to send it in to them, and I'm going to let you guys know what they say. But like, fuck, man, that was 16 extra points. I was in at 65, 16 extra points. As in, how much of an extra loss? That's about just over $300 times 2 accounts. So I took 600 extra. And then due to it being these accounts didn't have enough buffer from the unrealized, as soon as it went up a little bit against me more, I just got fucking flattened. If you put on both stops, will it cause an issue? Yeah, because imagine if they both get filled. Now you're going to have the opposite. You could have an OCO stop as limits once the idea. No, you can't. Folks, you should never use stop limits because if it goes past you, it's not going to close the position. I've said this a million times before. None of you should be suggesting a stop limit. Stop limits. You have a stop. If the next print is over that, you're never going to get out and it could keep running and you could take on a much larger loss than you thought. Stop limits for your downside protection are very, very dangerous. Very dangerous. Should I move? I'm thinking about, I'm actually almost back. Even with all that bullshit, I'm almost back to break even. If I get this fill, we'll be really close and then I'll have the runner. But I'm just hoping it doesn't come back above 52. So we got as low as 33. We didn't quite hit VWAP, which is currently at 29. Took profits early, but that's hindsight. Well, yeah, of course. So you don't know that going forward. You can't use that as like a measurable thing going forward because how would anyone have ever known? You always get a job at Burger King and stop trading, no trade risk. You know, that honestly might be the most practical explanation we've gotten. What is the appropriate term for a stop limit? The other one is a stop market. So there's two types of stop orders. A stop is basically saying, hey, if it hits this, it's your ripcord situation where I need like to pull the fuck out. So a stop market is saying if that price is traded, sending a market order to get out of your position. A stop limit is saying if that price is trading, get out, but only get you out if you could get out at exactly that price. So if it exceeds it and it can't get you out at that price, you might still be sitting there with the loss. Well, the stop market, once again, versus stop limit, a stop market is saying if that price is hit, send in a market order to like ensure you actually legitimately get out. A fractional delay of time in the software and the process request is the issue. I fully agree. I would be curious if there are statistics on how many times we had a lapse in execution to the point of spread. Yeah, I mean, it is notoriously slow, and I think it has to do... Hang on. Come on. Come on, fucker. Come on, fucker. You son of a bitch. Dude, no. Is it going to be one of those days? It got to 26. Fill it. Fill it. There we go. All right, so I got those two filled. So worst case situation is I'm down $250 per account because I put the stop at break even. But hang on. Let me just move this all the way down for a second because I want to see roughly where VWAP is at. I want to see roughly where VWAP is at. VWAP on NQ is at what value? 981. So should I just throw in mine at 82? That's the VWAP play. 82. All right. So that would technically, well, I'm front running VWAP by a little bit. And my stop's at break even. I could move it 10 points in my favor, maybe 12 points in my favor. So the worst case situation is the accounts are break even on the day. So I could move it down here. That's not 12 points, but we'll see. But this right here, this fill down at 25,982, that would be the, not VWAP, VWAP. I keep saying VWAP, excuse me. VWAP is 29. The downside gap fill equivalent on NQ is 982. That is the high from yesterday. And on QQQ, that is equivalent to 628.55. And as you can see, we are still very much range bound in SPY. Dude, I'm getting fucked on IWM right now. Interesting. We just have this channel to the upside. I wonder if it starts to snap, if that's the worthwhile play. So we already snapped the downward trend on NQ, but the SPY is just still holding it. All right, I'm watching this structure on SPY, obviously. Bullish breakout or bearish breakdown. Finding a lot of support at yesterday's high and low value. Look at that. We went right into it. A lot of people playing that. We waterfall. Surprise, surprise. People take their profits. We bounce right back up. We still have that opportunity potentially to the downside on the Qs, which is exactly what I'm playing. I am risking this VWAP bounce, which would suck because that means I'm actually going to be at a net loss of the day of 250. But if you ask me, I took an unnecessary $600 hit, an extra $600. Yeah, an extra 15 points. So I actually kind of consider myself to be up on the day because that $600 was fucking bullshit. Absolute bullshit. But I will reach out to them and let you guys know. Generally, they're pretty good about those types of things if you can like actually prove it. So fortunately, I was streaming it, so I have the video evidence. And remember, you have 15 hours left. Actually, to get those 5 accounts back, I'm going to get those today and trade it and try to pass those tests so I could just get in on the quote-unquote good deal. But anyway, 15 hours left on Apex. So this is your final trading day to not only get 80% off, but to get that cheap upgrade fee, which is why I want to pass it in the next 15 hours. And I also want to let you know, in 25 minutes, Spot Gamma is running a special presentation that is free for all of you. If you don't know what Spot Gamma is, it is the trace tool. It is the hero tool. It is the options analytics tool that is second to none. It is the options analytics tool that I don't understand how you could trade without it. It's so powerful, and they're about to add 5 more pieces of tools, services, of really just valuable data analytics options information. They are doing 5 new tools, 4 free webinars, exclusive giveaways. Claim your free access. It is pinned to the top of chat. It is in the description of the video. My mod will also throw it in chat if you can't find the link, but open up the description. It's at 11 a.m. ET today, as in it is in about 25 minutes. So at the end of this show, this is going on, and it is free, and you're going to be able to use the platform for free for a limited time to test out all these new tools. I highly recommend you do it, and if you want to sign up with your spot, like I said, use that link, but I think you're really, really going to enjoy it. Fuck, my runner is not running. Yeah, I knew. I was risking the VWAP bounce. We traded right down to VWAP and we bounced off of it. I was hoping, I was more so, honestly, I was thinking we were going to slash through VWAP and go to 26,000, and then I was going to have to risk riding the bounce all the way back up. I didn't think that we'd get such a strong bounce off of VWAP on the first attempt here. I really didn't. So this area, 45, is my account break even on the day. So if I could, I would love to move my stop down to 44 just so the accounts are slightly in the green. Come on, let's get another test of VWAP. VWAP's at 29. For those of you who are curious, the point of control is all the way up at 60. So VWAP 29, it's this white dash line that I believe my big fat head is blocking right now. And then this yellow line, the POC, is the point of control. That's where most volume has transacted today at that particular value, 26,060. Oh, getting a little bit of a pop here. I think we're getting a pop because the SPY is actually looking somewhat decent right now. We're getting that trend line break, so I'm on the wrong side of trend, folks. Tesla's getting a nice twoper. Tesla's trading at 460. Microsoft is up. Intraday is not looking so good, but percentage-wise, it's looking decent. AMD, Tesla. So the Russell is now destroying me. What the fuck? Oops, didn't want to do that. I'm still playing this downside gap fill on the Qs. I can't see there being, I can't see traders allowing 3 different gaps in the chart. I just don't see it. Honestly, if I wanted to, I could probably target the bottom of this range here at a 94. 94. So we broke to the downside the initial balance, the 1 hour Orbo on the Qs, but not on the SPY. That's interesting. Not on the SPY. But now we're starting to get a little bit of heat. All right, we're back at VWAP. If I had balls, I would have taken another contract on here and just risked that recent high and unloaded one at 82 and the other one at 42, the overnight trading session low. So I could have done 82 and 42. That would have been a nice amount of profit. But honestly, even if I hit that, that's good profit. 18, another 30, 50, that's $1,000. That put me over $1,000 on the day. So even if we hit this, I honestly can't complain that much. I can't complain that much. I'm just trying to disconnect and reconnect the data here. What the fuck? All right, we lost VWAP. We have lower highs and lower lows. SPY's taking a hit.
Order submitted. Order submitted. Order canceled. Order submitted.
Dude, this takes forever.
Order submitted. Order submitted. Order filled. Order filled.
All right, I feel like I should move my stop at least to this. So the stop is now at 52. Ooh, fuck. I'm having those issues. It's just updating. The fact that I disconnected and reconnected is kind of fucking me. Oh, how do I fix this? When it's orange like that, that's a problem. When it's orange like that, it's a problem. What do I need? I need 26,002. More importantly, what I need is 982. I'll just show you guys this. I don't know if my head's blocking it, but so this stop is not updating. The fact that it's yellow, I believe, means it's pending. Is that what yellow? Change submitted. But is it working? I don't. Yeah, it's just there. So I might have to manually manage this because it's just stuck in limbo. I'm a bit confused. Yeah, they're all stuck. It's just stuck. I'm just not having the best day with tech. I'm just not having the best day with my tech setup, folks. So maybe it's a me thing. Come on. I would actually, part of me is almost thinking this wick right above VWAP, maybe move it to 34, because then that would guarantee that my past ones are actually all in the green on the day. We're gonna, if I have to manually manage it, I will. Oh, Piper fired. Piper, pippity piper. What is today? The 28th. Today's the 28th, right? Yeah. All right. If you are in the Discord, Piper just fired. That's in there. All right, I'm just going to keep marking this stuff out. See if we get any actual breakdowns. IWM's catching another bid. Jesus, I got horrible fucking timing on that one. That's unfortunate. I was trying to just play, once again, the downside gap fill on that one as well. And getting a little bit murked there. Getting a little bit murked there. Oh, that's not good. All right, on NQ, I'm keeping it this basic. My next target is 26,000. That's a key technical level, psychological level. It's this low that we saw at 850 this morning, an important swing low. It's a slight overshoot of the 50 EMA on this 10-minute. Like, I think a lot of people, I mean, fuck, we could probably look it up on Bookmap. Yeah, look at, can you guys see this, or do I need to move myself over here? You guys can see it right here. A lot of people attempting to target this 26,000 level. A lot of people attempting it. Oh, I would love to move my stop now to 35. I'm just going to be mindful of it. That fact that it's still pending. I don't want to move this other order because then it could start to have that rate limit issue that we've previously seen. Yeah, I actually love the idea of 35.36. Just because I see this wick here, it's the 50 EMA, it is the super trend lines. I actually love the idea of moving the stop to 35.36 with this short that I'm short at 58. That's where I would put it. I mean, I could try to update it and see what happens. Where was it? So this is 34.75. My break even is 45. Yeah, I can't move shit, folks. We just hit, how low did we get? 9. Yeah, it feels like this is going to be an inflection point. Just a nice psychological level. Can you cancel it and resubmit it? Yeah, but then I don't know how that's going to mess with the OCO, because like right here I have the stop, but
Order
then
filled.
also the target. I could try that. Cancel all
Order canceled.
Yeah, but now it's stuck in pending. Like it hasn't even officially canceled it. Cancel, 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 cancel. Cancel, 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 cancel. No idea if they're actually canceled. Yeah, because it's just sitting there. Do I risk disconnecting and reconnecting and just pray?
Order.
Okay, I think it got rid of it. So let's go to none. OCO. Sell, buy, stop market.
Order submitted.
What was it? 82? Buy limit.
Order submitted.
All right, I think that worked. I still have one awkward cancel pending. Like they're just there. Something is weird for me today. Something is weird. But I think the OCO worked. I'm just looking at that recent high and looking at this recent low. We did recapture VWAP. I don't know if it's going to hold or not, if this is a little fake out, because as of now, we still haven't taken out the two recent highs up here at 52. We got up to 40. So I'm watching this, just watching if it either does or doesn't hold 29. 29 is VWAP. But I believe where I'm in at is the point of control. Yeah, 60. Oh, a lot of supportive buyers right here at 33. Look at that. A huge chunk of supportive buyers. And then sellers up here at 50. Interesting. I wonder. Yeah, a lot of, right. That's weird. 33. Look at all these buy orders. 33. $45 is my account break even. We haven't looked at the options flow in a second. We are seemingly bouncing off of 25 in this, somewhere in this 20-point region. So the SPY, we've kind of switched here this morning. So the SPY was weaker this morning and the Qs were stronger, but we flipped. Now the Qs are weaker and the SPY is stronger. Interesting. All right, looks like we failed at VWAP. Maybe this was just a fake outbreak right here. We overshot it, popped back up. They didn't like it, and now we're just stuck at VWAP. So just wait. Either wait for this break of 45 or wait for this breakdown of 08, which will probably just lead directly to this test of 26,000. I'm still attempting to play the downside gap fill. If you're just joining in right now and kind of wondering what am I doing, it's trades that I'm not the biggest fan of. The 5-minute is choppy, slightly bullish. The 10-minute is bullish. The 30-minute is bullish. The 4-hour is bullish. The 5-minute is pressing, but it's still bullish. 10 minutes bullish. 30-minute, 4 hours. So like it's fighting momentum, but that's just because the momentum of yesterday in the overnight session was so strong. Well, really what I was playing this morning is this weakness here. Look how weak that delta is. And even the SPY, we did pump, but it gave it all back. It's really choppy. This is a choppy, fucking messy day. Certain days are made way, way easier when everything is aligning. We're just not aligning. We're just unfortunately getting pegged to the VWAP, volume weighted average price, right here at 29. I guess you could watch that trend line snap. You could watch this trend line snap as well. We're just kind of waiting. I am thinking maybe I should be updating my... But if I do it, will this actually even work? Okay. I think this is roughly my break even because I'm down by 250 per account. That's 13 points. That should be 260. So if this hits, at least I'm not losing on the day, you know? The SPY showing a little bit of strength. Let's have this reversal in here. The Russell somehow catching a very nice bid. I don't know, man. Something about this. The Mag 7 just ever since 947, this delta is just getting smoked. The SPY was getting smoked, then it pumped, then it got really hit, and now we're coming back, but it's like not the easiest trending day. Yesterday was a little bit more of like a clear-cut, evident setup. A little bit more of a clear-cut, evident setup. If it breaks 21, the question is, do I want to throw on a new independent position if we do this? That's the real question. Let's not even let's disregard the fact that I'm 5 points away from getting stopped out anyway. But I'm just saying if it snaps VWAP, it snaps that recent low, you could target 08 and you could target 26,000. I know I'm putting the cart before the horse because if anything, we just put in a higher low and we're above the EMAs and we're above VWAP and this, that, the other thing. But hey, little boy dream. Little boy dream. Dude, these accounts, that's such bullshit. Such utter bullshit. That makes me so fucking angry. $15 points away. Yeah, here it's about to tag me out. Whatever. You know, for as mess up as today's been for me, the fact that I can even say, hey, these are going to be green, that we'll take the win when we can. We'll take the win when we can. It just feels like if I am break even, to be fair, I should be up by about $600 per account. And in reality, if I was up by $600 at one point in these other trades, I would have seen the net being 1,000, and I probably would have shut it all down, especially here, because that's so frustrating. But hey, we can't blame everyone else for our own problems. I'm long at 36 entry. I don't mind that. You're basically playing it off of VWAP. I would hope that your risk is set to this recent low. And if you play the recovery, you play the recovery.
Filled.
All right. Okay. Yeah, I'm break even. It tagged me. It tagged me. Yeah, you said you're long at 36. I don't mind that at all. You played the higher low. You played the recapture of the EMA. Your risk should be this 950 low at 22. So you're risking 14, 15 points. You never know the next bar. If it's a full recovery, you get to play it all the way back up. And then on the flip side, if it starts to show weakness, you can play it the other way. It's just a game of risk reward. Assume that the odds are 50-50, and it's how do you play the risk reward and the appropriate contract size. My only hesitation about your play to go long there is the flow. You are fighting against flow for sure. The flow's been going down ever since 947, which is painting my scalp trading, day trading bias as a bit bearish. For sure. But the SPY is looking good. Well, no, the SPY just switched course. Interesting. I wonder if, I don't know. We have these lower highs, but we also have higher lows. You're seeing consolidation. The Qs did make, I guess one thing I don't like about that Q play is we did make fresh lows and we haven't made a fresh high. I could understand either way with the SPY because it's just consolidating. And if you get the break of consolidation in the right direction, congrats, you won. But the Qs are lower highs and lower lows. So since the start of the day, this is a bearish price trend. So I get that you're trading with momentum bullish, but you're fighting against price trend, which is lower highs and lower lows. Oh, is the SPY lethargically falling back over? The move was early this morning that hit. We had a little bit of pump, and since then, we're kind of doing nothing. This might be the day where maybe you wait for the afternoon to do anything. Oh, fuck. I'm so pissed off I lost those 5 accounts on some absolute fucking bullshit, man. Some absolute bullshit. Fuck, dude. That's so frustrating, but it happens. Hey, folks, before things wrap up today, I want to remind you, Apex, this is the last day to get the deal. You bet I'm going to be doing this to get PAs before they became more expensive, so I'm going to be degenerately trading some of my accounts later today. And also, in a mere 2 minutes, Spot Gamma is hosting the Hidden Forces Unmasked. They are unveiling 5 new tools/services, and you can get free access to this. My mod will be putting this in chat. It's in the description of the video. Free access to Spot Gamma. Check out the lecture. You're going to be able to test ride it at no financial risk to you. See if you like it. See if you don't like it. Highly recommend checking it out. It literally starts in 2 minutes. So at the end of this show starts. You guys might as well check it out because once again, they're doing giveaways. You get free access for a limited time, and you're going to get to see the brand new unveiling of a lot of new things. Hero updates, options calculator, Compass historical trail, 5 new scanners, and VIX term structure. So it's going to be really, really cool. Check it out. Starts in now about 1 minute. Oh, I'm so tempted. Do I want to play this? So if I do this, my risk is 47. My risk is 12 points. My risk is 12 points. We just broke down below the EMAs. Maybe I wait to see if there's one more little bounce, and then if that bounce fails, short it. Oh, I'm torn on this one. I'm torn on this one, team. I am torn. do I wait for the bounce? Because I know I see in the very short term it's higher highs and higher lows, but overall it's lower highs and lower lows. So it's more of like time frame dependent. We're right at the EMA, so I would have preferred to be in at 39, but that's not bad at 33. But what if it just bounces off of VWAP here? What if this is just a higher low and it bounces and takes this out? But on the flip side, if it cracks VWAP, that's like the 50-50 nature of it. That's the 50-50 nature. Spot Gamma Live is around 12. No, it's now. Right now, this minute, it's 11. It is, yeah, if this fails, if this little bounce here fails, if we start to take out these recent wicks, I'm going to throw on a short position. But anyway, I myself am about to go listen to the Spot Gamma call. I want to know the new tools and stuff myself. So that is literally starting right now. Highly recommend you guys all check it out because it is 100% free. And on top of that, there's giveaways and you're going to get access to the new tools for a limited time. And don't forget, today's the last day of Apex. So if you're trying to get in on the cheap, this is the day to do it. Folks, that's what I have for you now. We'll be posting an update video later on today, and then we'll be streaming extra long tomorrow because of the FOMC meeting and all that stuff. So update video tonight, FOM stream tomorrow, and literally starting right now is the Apex information. So feel free to check all of that out. That's what I have for you. I appreciate all the good vibes. I'll catch you guys on the flippity flip. Peace.